Hello there, this is Victor Santana at StockHunters.com for Monday, October 17th. Alright, here we are looking at the S&P 500, looking at the SPY stock chart here going back 3 months, each candle being 1 day. And today we closed 1.9% today. As you can see right here, this red candle, and we are stuck between these two little trend lines here, this upper range here and this angle one here that extends from all the way back over here to September. So we're right between here, trying to decide what we're going to do. We're going to pop back up or break down further. And if we do break down further, we do have these two moving averages here, the 50 and the 18, to give us a lot of support. So that'll be our first target here. Worst case scenario, if it breaks even sharply down, we'll have a target range around in this area here. But that is very remote. So for now, we see most likely down in this area here first. Okay, now let's go take a look at the RSI. As you can see with the RSI, it is now heading down past the the 70 line here, which you see here is the 70 mark, and it is now crossing the red line here as well. MACD is now curving toward the downside, and here you go, our first day of the red bar. The histogram now is pointing red. It has a negative value of 0.07. So uh, this could be the beginning of a downside, a short one possibly here, meaning that it could probably pull around on the RSI. Maybe not fully all the way down, but 3/4 down before resuming up, because it seems like we may be getting a higher low in this case, especially due to the seasonality that we're getting into the end of the year, the Christmas rally. So, well, that's what we expect, and we'll anticipate this and just watch our indicators and see how they move around. Alrighty, that's on the S&P. Let's go ahead and take a look at the Dow. Now, as you can see here, also down 2.1%, and it is now, there's really nothing down here that's going to support it other than what's down in this area, which is the moving averages. So this will probably be a most likely target. RSI is pointing down, so we have the setup on the top, and now we got the trigger here. If we break lower than today's low, which is approximately 11.35, $113.50, that is, we continue on maybe down to this area. Let's go ahead and look at the NASDAQ, which has been the strongest. And as you can see here with the NASDAQ, it's basically stuck between these two trend lines as well. The one that follows all the way back here to August, and this top right here, September 19th area, going across this way here. So we're stuck right in this range here. We do have the crossover of this moving average within the RSI, and it's pointing down lower. MACD is also now curving downward. We don't really have a very strong bar here. It's virtually flat, so it has not confirmed yet that the momentum is building toward the downside. So we'll watch and wait for this. Let's go ahead and look at the Russells, small caps. And as you can see with this here, we are between these two trend lines as well. It has dropped 3.04%. At the RSI, it has now crossed over the moving average, with the RSI now firmly below the 70. MACD is now curving downward, and we do have a small bar, red bar at the bottom here, as you could see. So this could be the beginning, more momentum pushing to the downside. What can we expect to see? Well, we're already hitting this 50-day moving average here. It tagged it and kind of pulled up. So maybe the next hit will be here at the 20. So worst case scenario will be down here at this trend line at this end. So we'll see how far this can pull back down and give us some kind of reading to consider going long the other way. So this is what we got. And now finally let's look at the global stocks. Global stocks seems like it's trending sideways up here, and this one has dropped 1.76%. RSI did now break below the 70, crossing over the moving average within the RSI. MACD now curving downward. We do have the trigger to considering buying short on the global markets. You can see this little tiny red bar here. Not a very strong one, but because volume is light on all the indices, so we're not getting a very strong firm signal as opposed to these down here. So we'll just watch and wait. Going back to the S&P, I like to just to show you the cycles here, what we got. This is the monthly cycle here, which is 21 days of the slow stochastic, and this is the weekly. And as you can see, the weekly is already crossed over and is already pointing downward here, while the monthly here, it is just starting to kiss the two lines here together. Now, typically, what we see is the weekly and the monthly at the same time roll over to get our signals. And for example, in this one here, you could see that it's rolled over sooner on the weekly, while on the monthly it took longer to get that rollover. And let's see what it looks like here. Just so it's right here. So it's telling us that the pullback is not going to be as severe, because if you look at this pullback here, it traded sideways here. And then looking at this here, they basically triggered at the same time, and we got that pullback right here for a few days. And then same thing with this one here, which represents back up here. So it just kind of gives you an idea of where the cycle is. So we are in the very top. This can trade sideways up on this end, and this could resume back up, especially if we get a trend, a strong trend. But we'll just wait till it proves that it can. Until then, we'll just watch this. Let's go ahead and take a look at our individual trades now real quick. We're looking at the DZZ shorting the gold 2 times, and here we entered back in this area here. It's trading down here below on this area. It just touched the 20 mark here, or the 30, excuse me, and trending sideways here. And this down here, we have no bars here, so it's flat. It's not giving us a direction of each of the momentum, any strong momentum, other than it's just floating downward here. It's getting to be a little bit difficult in terms of holding this. So we'll just have to watch and wait if you can. If it gets below down here, the 472, then that's definitely will get out. Meanwhile, we've got a little bit of resistance here. We're looking for a pop up to the 100-day here. If we manage to get up here sooner or later, then this will be a good target to get out. But meanwhile, we'll just have to suffer through this one here. at least on my trade. Let's go at ERY energy, and then here we went ahead and put a position right here, kind of ahead, anticipating a crossover sooner, but instead it just kind of lingered on slowly down here, and we still do not have any strong buy signal. So uh, we're down here enduring this loss here. Uh, we could trade up to this area or up this area depending on how the markets behave the next few weeks or a few days rather. So again, this is what happens when you try to anticipate getting in too soon. Let's go ahead and take a look at FAZ. FAZ, we've got two positions in here. We put one position right in this area and another one right here in this area. And we finally did get the setup here, and now we're just starting to get the trigger, which it'd be worthwhile to put an order just above, slightly above today's high. As you can see, we are in the money based on the second position here, so that's a good thing. Hopefully we can get that follow through and at least get tagged up to this area here. This first position, the way it's looking, may not work out for us or just break even, so we'll just watch and see. Looking at Las Vegas Sand, this is an actual short. We went ahead and put a short right in this area, 44.08, and it did trade it down a couple of days later. However, it reversed and now it's staying on the top side here. RSI is slowly inching down slowly. MACD has not triggered yet, so we'll have to watch and wait. Again, we're still having our exit right here. This one we're going to hold firmly to it. Okay, QID, we got entered in here on this date ahead of this signal, and they did get crossed over here in the RSI, but we do not have a trigger signal to put an order yet. So again, got ahead of the game, and now we're just suffering through the consequences as far as this small loss here. Kind of a lesson as far as to stay disciplined to the trading plan. Let's look at SDS, shorting the S&P 500, entered here in anticipation of down in here, floated down lower. We got that pop, we got the crossover, and now we got the setup, as I call it, the setup, and now we got the trigger here. You can see a small little green bar here, so it's safe to put an order right above at the high of today. And SPXU, same story, entered in here, and now we gotten up here. We're waiting for it to get here or down up here, and we got the setup, and now we got the trigger. Trigger meaning put the entry order at the high of today's candle. And then the last one, TZA, my favorite. As you can see, we've played it numerous times. The last couple of times we played it, we got 18% out of it, we got 15% out of it. So now we got three positions in line, and we got the crossover, the setup, and now we got the trigger here. So we're in the money on this third position we added several days ago, last week, and so we're waiting on to get at least try to recoup the second position here. And if the market really gets hurt, we could see it down up here to get a little bit, not as much as these we expect, but at least some positive in the money here. Alright, well, that's pretty much it. No new trades other than the ones that I mentioned about the trigger. And have fun. Until next time, keep your eyes on the markets, and remember, stops that goes in, your emotions stay out. Take care.